Text Pfizer, the world's largest pharmaceutical company, has announced its intention to buy Seagen, a biotechnology firm that specializes in developing cancer treatments. The deal is valued at $48 billion and would give Pfizer access to Seagen's portfolio of approved and experimental drugs, as well as its expertise in antibody-drug conjugates, a type of targeted therapy that delivers potent toxins to cancer cells. To finance this acquisition, Pfizer plans to raise $31 billion through a debt offering, which is one of the largest bond sales in corporate history. A debt offering is when a company borrows money from investors by issuing bonds, which are contracts that promise to pay back the principal amount plus interest over a fixed period of time. By issuing bonds, Pfizer can take advantage of the low interest rates in the market and avoid diluting its existing shareholders. However, taking on more debt also comes with some risks. Pfizer will have to pay interest on its bonds, which will reduce its earnings and cash flow. It will also have to repay its debt obligations when they mature, which could limit its financial flexibility and ability to invest in other opportunities. Moreover, increasing its debt level could affect its credit rating, which is a measure of how likely it is to default on its payments. A lower credit rating could make it harder and more expensive for Pfizer to borrow money in the future. Therefore, Pfizer has to balance the benefits and costs of using debt to fund its Seagen acquisition. On one hand, it can gain a competitive edge in the oncology market and diversify its revenue streams. On the other hand, it can increase its financial leverage and expose itself to more risks. How will this debt offering affect Pfizer's performance and prospects? We will explore this question in the next section. Pfizer expects to complete the $43 billion Seagen buyout later this year or in early 2024. This is one of the biggest deals in the biotech industry in recent years. Pfizer is betting on Seagen's expertise in antibody-drug conjugates, or ADCs, which are a type of targeted cancer therapy. Seagen has 2 approved ADCs in the market, Padcev and Tukysa, and several others in development. Pfizer hopes to leverage Seagen's pipeline and platform to expand its own oncology portfolio and generate long-term growth. The deal will also give Pfizer access to Seagen's royalty streams from its collaborations with other companies, such as Merck and Genentech. Pfizer plans to finance the deal with a combination of cash and debt. The company recently issued $31 billion worth of bonds with various maturities and interest rates. This is the largest bond sale by a pharmaceutical company ever. Pfizer said it will use the proceeds to fund the Seagen acquisition and for general corporate purposes. The bond offering was well received by investors, who see Pfizer as a stable and profitable company with a strong cash flow. Pfizer's credit rating remains solid despite the increased debt load. The company expects to maintain its dividend policy and continue to invest in research and development after the deal closes.